Hey, it's Mike. I was hoping to maybe demonstrate a trade here. We got a second entry, but that signal bar is just way too neutral right there. People ask me every day about signal bars. If you're going long, you want a bullish signal bar like that right there. This one would probably be okay. It's mostly bullish. It's still got some red in it, but the key to a bullish bar is it closes mostly near its high. And if it's bearish, it closes mostly near its low. A lot of people would call that bar right there a doji because it doesn't have any body, but it's not. That's still a very bullish bar. Look how big that tail is, and it closes almost on its side. That's still a very bullish bar. So that one right there is very bearish because it closes. Let me make it a little bigger here. Because it closes mostly on its low right there, so it's still bearish. This one this one's in the middle. It's neutral. That's neutral. And you can see we start going sideways. So stay away from those neutral bars. See, that one's real neutral. Now we're just kind of forming an inside bar. So stay away from those neutral bars. That one's mostly bearish right there. Um, we may or may not get along here, but we're right off a key entry point, and when it breaks higher, it'll be a second entry. But if it's on this bar, I'm not going to take it because my signal bar is too neutral. I don't want to risk. Here's a nice bullish signal bar. Notice how it closed on its very high. That bar is bullish. That's mostly bullish. That's bullish. This one's getting close to being neutral. And I'm not saying any of these are good places to enter. I'm just pointing out this, if it was your signal bar. I'd probably take that trade on a higher low right there. Even though that's not a perfect signal bar, it still closes close enough to that. If it was even one tick lower, you'd have to scratch that one. And that's not a really great signal bar. It's just not a bad signal bar. This is a perfect signal bar. Closes on its high. This is a really good signal bar. This was a good signal bar. And notice that's the second entry. Pull back first entry, pull back second entry. But it's not a great place to enter because it's right in the middle here, and you just came off the high. It still goes higher, but look what it would have stopped you out first. It's a little short trap. They trap the longs out and trap some shorts in and then run it up and it comes right back. Now we may get a setup here. We'll see. I'm gonna place an order one tick above. Well, that bar right there in case it goes all the way through on this same bar. If not, I'll drag it down. And it's just another way you can kind of try to work ahead of the game if you wanted to. I wouldn't want to enter on this bar other than the fact that this broke lower first. So if it went and ran all the way out the other side, that's a good sign. And you might just let it run out the other side and then drop a limit order in just to get a little better entry because that would be a fairly large bar. And we may just continue lower here. So there may be no trade yet. We'll see how this ends. But if you back up here a little bit, you can see that we've just really gone into this brown channel. And within that, there's a little spike up in this channel. Okay. Prices broke higher. There we go. Trade triggered. Just trying to make it a little bigger here. Let's move my stop down here where it goes. One tick below the swing low. And we'll scalp out with our 4 ticks if we can get that, and we'll see what we can get on this runner here. Of course, we got to get out of the scalp first. Right now we're just shooting for our scalp. And you can see we got this uptrend, and we just came off the trend line. We may pull back here and test this trend line again. We'll see how this one closes. They're trying to close it very bearish. And it does. You can see that closed relatively bearish. Not surprising that we pulled back to the trend line there again. We may even tick lower before it goes higher. We'll see, because we got a little close outside our trend line here. But you can see my trend line working down. And that's really the first close outside. And that's kind of the problem sometimes with trying to sneak in a little early. Now we got that little tick higher. Let's see if we get a higher low here now. Maybe we'll take on off this time. So you've probably been better off to wait on a higher low here. Here we go. Taking on off there. And that's why you put your stop where I put it, because if you'd have had your stop anywhere else in here, you'd have got stopped out on this trade. I mean, still not, the trade still, we still hadn't got our scalp yet, but it's looking pretty good. And there we go. We moved to break even. I'll move that to break even +1. But notice how I didn't monkey with my trade and I didn't put my stop in the middle of the bar somewhere. Come on, go higher. Give us a runner here. Well, we got stopped out at break even on that one, but I still made a point off the, still got 5 ticks off the runners. And so we basically made 16 points on that trade. That wasn't a great setup because I probably should have waited on this bar. We still would have, well, it wouldn't have triggered. Yeah, it would have triggered because it broke lower and went out. So we would have been in here. We wouldn't have got quite as good an entry. So, and we do have this midline of the bigger trade going higher. But anyway, that was a quick, but that's a great example of, notice we're coming down here. It looks like we had a little close outside, but we closed outside. We tried to go lower. So this was a higher low right here, which probably would have been the better trade to wait on, because now you got to close outside and you've tried to go lower and you've bounced off that. I'll come back after a few minutes. We get a little more price action and I'll do a recap on this trend. You can see the trend coming up here, and notice we had a new high. You're working back first entry, you're coming back, and you got a second entry long right at the key entry point. You might wait here because of this trend line. You might wait for the higher low, and you actually got a failed second entry short here. And this, notice how it really took off then. So, and really, when it broke above here, that's still the higher low because it never broke above this bar. It actually went lower and turned and went out the other side. So you could have entered that way. There's 3 different ways you could have entered. Long right here on 1 tick above that. Then when it broke lower and turned and went back up, that's your higher low. So you could have put a buy stop right there and entered, or you could have waited for this one to close and then put your buy stop up here, but then it would have ended up being a failed second entry short, and you would have had another nice signal bar here and put your buy stop 1 tick above that. And that turns out to be the best entry, because now you tried to go lower 3 times and you're closing back above the EMA. That's the more, and you can see that's when it really takes off, because that's when more people trust the entry. You're being a little more aggressive here where I entered, but it is a key entry point. It's a second entry long. It's a great signal bar. There's a few things that would work against that. One being this trend line working down. You got a little bit of a close outside. That's not very convincing. So this could easily be more like that. but notice it doesn't catch the bodies down through here. So I believe I had it right to begin with. It's usually right off those bodies down through there, like so. And that does give you a slight close outside. And if you copy that and move it over, you can see it fits pretty good on that side too as well. So I believe that to be it. So that was another reason I like that one. Again, you could have been a little more patient, but I was trying to demonstrate a trade here, and I was afraid that if I didn't take the more aggressive trade, it may take off, and it may not get a chance to show you a trade at all. But if we back out and look at the big picture, we had a two-tier channel working higher, and then we just kind of flattened over, and now you've got this brown two-tier channel working higher. And my guess is, notice that we had two legs up, so we already met that measured move before the regular open ever even came. So we met that target around 8 o'clock this morning. So then of course you would look for this target, which we met that one as well, but we just kind of spiked up and went in this flatter channel here. And we also, I would say, this brown channel. So we could have a target up here. Although now the two-tiered one, we've got a break and a couple legs up to a new high, so it wouldn't surprise me if we don't see something different happen. You'll want to respect this line when prices come back to it, but if prices push on through, you may not see another retest of the high. We'll just have to see. But right now the trend is still up and the bias is still up, so you're still looking for long. So as long as this little channel right here that I just took the trade off the trend line, as long as that stays in play, you'd want to stay with that. We got a little close outside of it right there. We do have a new high, 2 legs up, so we could reverse now. So you just have to wait and play it out, see what happens when we come back to this trend line. But notice even this midline, even during this channel, this brown midline, prices are still reacting off both sides of it. And that's what causes these little flags and pennants and all of these other names they have for these different patterns, and that's why you can't pay any attention to that stuff, because what causes those is intersecting support and resistance. And you're better off to understand why the pennant or flag or whatever you're looking at, head and shoulders, forget about all that stuff. You're better off to understand what's causing that, and it's usually going to be conflicting support and resistance trend lines from different, and this is why price action is universal. This is what makes it work universally, is the fact that there's something going on at every level. So you got the big brown channel working, but inside that you got this little spike in channel, and even within inside that you got these different trends working. So it works at every level, and if you went down to even more micro level, you'd still see the same things. But that's the beauty of what we do. It works at every price level. You'll see it working at every level, and it all meshes together in the end. And so if you went to a weekly chart, or let's just say we went to a daily chart first, you'd see some of these same patterns working on a daily chart. But we're inside each day now, really, is what we're doing here. We've come with this 2000 tick chart, we're just looking inside of a one daily bar. But if you went to a daily chart, which I've showed you before, you'll still see the same patterns and everything, and it still works exactly the same. So hopefully this was helpful. It's a shame we didn't get a runner on that one, but that's the way it goes sometimes. You won't get a runner every time. We still made our 16 points plus a tick, and it still was a good trade. So, but that's why we do what we do with the spike and or the scalp and run, because we still make sure we make money even if we don't catch a runner. And most likely, if you'd have traded the failed second entry short there, well, you might have even got stopped out on that one. You may not have got a runner on that one at all. Sometimes you just don't get runners. That's just the way it goes. Sometimes you do, sometimes you don't. Anyway, I'm going to wrap this one up.